Jai Hind friends. If you are new to this channel, then please hit the subscribe button so that whenever a new video is uploaded, you can get the notification. And if you like the video, then please hit the like button. This will keep motivating me to make these videos. So let's start with the latest news which is coming on Credit Suisse. So you can see here that financial shares fall as Credit Suisse becomes the latest crisis for the sector. So it seems the story is not over yet. There are chances that we may see some more banks falling, but you will only see that for banks which were already very weak. So now I'm at the chart for Credit Suisse, and this, as the name suggests, is a Switzerland company. And you can see that it is not that it has fallen only now after the crisis. From the last 1 year it has been falling, and in the period of last 1 year it has already fallen by 74%. This crisis have only added insult to the injury. So all the weak banks in the high interest rate scenario are going to face a lot of problem, and they are facing it also. Now the question may come to your mind that are the Indian banks safe? So the answer is yes. There is no implication on the Indian banks, but because of the market sentiments, our banks are also falling. And it is not only the banks, the entire Indian market is also falling. So if you ask me, this is the right time to buy Indian banks because Indian banks are very strong at this moment. And if you get them at a discounted price, then it will be a good opportunity to buy those shares. And you can focus on the top 3 banks, which is SDFC, ICICI and Kotak Bank. So this was about the latest news, but we are not going to cover banks in this video. We are going to cover 2 shares, and we are going to discuss one good news and one bad news. So this is the news which says that Bajaj Finance may face problem for scaling amid intense competition in home loan market, says Ambit Capital. And what they are saying here is that Bajaj Finance growth is slowing down, and it is mainly due to the size and the competition. And they are saying that Bajaj Finance has already grown by 23% CAGR, which no other Indian bank, NBFC or HFC has witnessed in the last couple of decades. And it has a 45% market share amongst the NBFC in commercial personal loan, wherein the competition is increasing from banks. So what they are trying to say is that since nobody else has been able to achieve 23% CAGR, no other NBFC, no other bank has ever achieved it, so Bajaj Finance also cannot sustain this growth. And what they are also mentioning is that the cost of fund is likely to be 250 BPS higher than large bank, which makes Bajaj Finance uncompetitive. And if we go further down, what they are saying is that Bajaj Finance have already corrected by 22%. And Ambit said that it sees further downside of 18% in the counter, and they have given a sell rating and a target price of 5,028 rupees per share. So this is what the study of Ambit Capital is saying, that we should sell Bajaj Finance because it is going to come down to 5,000 levels. Regarding the sell portion, we will discuss more on it, but whether I also want it to come down to 5,000 level, the answer is yes. I want it to come down to 5,000 and even to 4,500 so that we can buy more. So for this, we have to go a little bit in the history of Bajaj Finance. So here you can see that on 10th July 2019, there was a report from Morgan Stanley in which they said that they see a downside of 18% in Bajaj Finance. And it was in 2019, and at that time COVID was not there. Let's go through this report a little bit. So here you can see the detail. Morgan Stanley sees 18% downside in Bajaj Finance and stock falls by 3%. So Morgan Stanley has equal weight rating on the stock with a target price of 2950 per share. This was, you can see, on 10th July 2019. And here you can see the reason that they gave to support their research of seeing Bajaj Finance falling by 18%. So you can see Bajaj Finance marked moderation in customer acquisition driven largely by B2B business. Q1, Q3 are seasonally strongest quarters for B2B business. Weak Q1 growth could have affected full year new customer growth, it feels. So based on the results of few quarters, they felt that the customer acquisition is going down. And we all know what has happened after 2019 and at what level the stock price is currently trading. Currently it is trading at 5,718, and even if it goes down to 5,000 level, which Ambit is predicting, even after that, post Morgan Stanley report, there is an upside of 2,000 rupees on the share price. So again, the crux of the discussion is do not blindly follow these reports. If you have conviction on a good company, then you have to stay with that company. And Bajaj Finance competitive advantage is its data. It has immense data of customer based on which it grants loan to its customer, and because of which their NPAs are also the lowest in the NBFC sector. So in the long term, for next 10 to 15 years, I do not see anyone competing with Bajaj Finance. Now let's look at the chart. And now we are at the chart for Bajaj Finance, and it is currently at its support 5720. You can see earlier also it touched this level, and again it has come to 5720 level. And as a shareholder, I'm just praying if it comes down to 55, 52 or even 5,000, then I'm talking about myself personally, I'm going to do buy on dips on this share. And if you look at the RSI indicator, the RSI indicator is also showing that it is currently in the buying zone. You can see it is currently at 29. So I have full conviction on Bajaj Finance. I'm going to continue with Bajaj Finance. I also have Bajaj Finance in my portfolio. So if you think I'm being biased on this stock and my views are biased, then please ignore it. do your own study and research, and then only invest in this company. Next important news is on Varun Beverages, and you can see multi-bagger stock Varun Beverages share can rally up to 24%, says the analyst. And you can see that Sher Khan has retained a positive stance on one of the largest franchise of PepsiCo, which is VBL, with an upside potential of 24% in the next 12 months. And why they are suggesting that is because of the VBL's strong growth outlook. Management is optimistic about achieving strong revenue growth in the upcoming season, as the inventory created for summer season has already been exhausted. So there was a good commentary from the management side that they see good growth opportunity in this year also. You can see here that sensing strong growth opportunities in domestic market, the company will be expanding its existing capacity by 30% and distribution by 10% in the coming years. So management is saying they are increasing their capacity by 30% and distribution network by 10%. So it's a good news, it's a positive news from the management side. And I will not be surprised if this company is able to provide that much of return in the period of next 12 months. But does this mean we should go ahead and buy this share right now? My answer will be no. And for that, let's go on the chart. Now we are at the chart for VBL, and you can see that it is around 1340 and it made a high at around 1440 rupees here. So the discount that we are getting on this company is not that great. So if you'll be buying this company right now at this level, you will be buying it in greed, because we should let this company fall back to its support so that it gives us good discount to enter into this company. There is a possibility that it can give an upside from here, but that is completely fine, because even after an upside from here, the stock will not keep on moving in the upward direction in a straight line. Even if it goes up from 1350, it will again come down and give us opportunity. It has done that in the past also. You can see that here it was an opportunity, here, and again here there was an opportunity. So a stock will give you opportunity. You don't have to buy it in greed. And if I look at the RSI indicator also, the RSI indicator is also suggesting that it is not in the buying zone right now, and it is also not in the oversold zone right now. So it is currently trading at 58. And you can also notice that this company has not gone down below 40 during this time. Only at this time it touched 40, then again 2 times it touched 40 here. So that was the buying opportunity. So in this case, I'm not saying that we have to wait for this company to fall at 40, but I'm suggesting that at least it should give us a discount of 10 to 15% minimum. Because currently it is in a good momentum and we are approaching summer season also. So everyone is expecting that this company is going to do good. So the chances are very less that it will reach 40 or go beyond 40. So even a 10% or a 15% discount will be a good percentage discount to get into this company. Whoever already hold the share of this company can stay put and enjoy their returns. Because I remember we discussed this company when it touched around 1100, and if somebody invested at that level, they are currently sitting on good profit. So this brings us to the end of the video. Please remember, these were all my views. Please do your own research and study also before taking any buying and selling decision. And in case if you have any question, or in case you want me to make a video on any specific topic, you can mention it in the comment section also. So bye for now. We'll meet in the next video. Thank you.